amid declining sales, crashing profits, increasing competition, risks from tariffs, headwinds from changes in legislation. Tesla CEO Elon Musk remained on point and as optimistic as ever, claiming the company could be the most valuable company in the world if they execute on their plans. So, I wanted to take a look at what the CEO said to Wall Street analysts and investors and what it could mean for Tesla stock investors. I think it's important to have a professional review Tesla's conference call transcripts because the company's management team likes to embellish a little bit, if you haven't noticed. And so I think you need to have someone, I think you need to evaluate their earnings calls and what the company's management team says with a perspective from someone who's been following the company for a long time and has been following other companies and can compare what the company does versus what it says it does and what it could mean for investors. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Elon Musk said that in the quarter they were able to successfully launch robotaxi, providing the first drives with no one in the driver's seat with paying customers in Austin. Okay, so true, they were able to launch this robo-taxi, but what the CEO very conveniently leaves out here is that there was a safety person in the passenger seat. So true, no one in the driver's seat, but he leaves out that there is someone in the passenger seat with controls available to avert some emergency situations. So with some control over the car, although of course not as much control over the car if you're in the driver's seat, but still with some control over the car from the passenger seat. And thankfully, there hasn't been any disasters so far in the launch with the robo taxi. Of course, these cars are limited to less than 40 miles per hour, but still, there was a risk that there could be some major disasters given the unproven technology and rolling it out for the first time. So, very good news there. Finally, the company rolls out this test. For many, many years, Tesla's been promising investors that very soon they will have driverless cars on the road. And this is a step forward, which was desperately behind here from Tesla. So good news here for Tesla stock investors to be sure. The CEO also saying that we're getting the regulatory permission to launch in the Bay Area, Nevada, Arizona, Florida, and a number of other places, meaning they're trying to get that regulatory approval. They have not yet to receive that as of my latest updates. But it's good news to see that they are expanding or confident enough to apply for expanding these tests in a number of other cities. And staying true to character, again, here is some more boastful claims from the CEO saying that I think we'll probably have autonomous ride hailing in probably half the population by the end of this year. So we're July 24th today. By December 31st, the CEO is claiming that they will have driverless cars by the end of this year. I will take the under on that. I would wager a considerable amount of money that they will not have driverless ride hailing in half of the population by the end of the year. I wish there were some markets where I could place a wager on this not happening, because this is, again, a claim, another claim from the CEO to, get investors excited and get the companies, more importantly, the workers excited, right? If you're working at Tesla, engineering these products, placing these kinds of deadlines from the CEO puts you under pressure. And instead of working 8 hours a day, you work 12 hours a day and you help improve the speed at which this rolls out. So saying then, I think we'll technically be able to do it, assuming we get regulatory approvals. Of course, that's all of it, right? Technically being able to do it is not the same as getting regulatory approvals to do it, right? Technically being able to do it is a whole other situation compared to getting regulatory approval. To get regulatory approval, you need to prove that this technology is safe, meaning safe, like completely safe, not 99%. You need to be more than 99%. You need to be closer to 100%. And they're very far away from being able to do that. They don't have the level 4 autonomy just yet. The vehicles are limited using camera-only technology without the lidars and radars and other sensors that driverless cars today that are on the road, like Google's Waymo, they have that radar, lidar, and other sensors that make it much more safe than using a camera-only approach. But the big downside of using all of those sensors is that it's considerably more expensive, and you're limited to rolling it out in a location by location setting. So you can't just turn on a switch and have all of your cars become driverless cars on the way that Tesla can. So Tesla's approaching this on a more scalable way, and that's why it's going to take longer, because they're approaching it in a completely different way than the technology you're seeing on the road. And it might pay off. There's a probability, right, a non-zero chance that it will pay off, and it could pay off magnificently for Tesla and Tesla stock investors. The risk here is that the valuation of Tesla stock incorporates a very high probability that it will succeed. So the valuation of Tesla stock right now, trading at a forward price to earnings of over 150, assumes that this will they will achieve this with a very high likelihood, a likelihood of over 75%. And you have to make that assumption to make the valuation make sense. Otherwise, the valuation at a forward PE of 150, that's 30 times the valuation of other car companies. 30 times. So it's not trading like a car company. It's not even trading like an AI company. It's trading like an AI company on steroids. Nvidia stock, Amazon stock, Alphabet stock, Microsoft stock, Tesla trades at roughly 5 times the valuation of all of those incredible companies I just mentioned. And all of that, almost all of that, is attributable to the driverless car technology and the rollout of the driverless car technology. So it's very dependent on that technology. The CEO saying that they're being very cautious. We don't want to take any chances. Thankfully, they're being cautious on the roads and not causing any disasters and things of that nature. They're being a little bit loose in terms of the forecasts of what this technology and when this technology will be available. They're being very loose with that, and they've been loose with that for many, many years, right? Over promising, under delivering. They're loose with that, but at least they're cautious in terms of the safety on the roads. And all of us that are traveling on the roads, at least can be thankful that they're being cautious on the roads, and they're not taking this same liberal approach to their forecasts and taking that same liberal approach to the roads. So we can all be thankful for that. Okay, so this document I have here, this highlighted transcript of Tesla's latest earnings call, I've made available for all my channel members to see. You go to your membership benefits section on my YouTube channel, and you can see the file where this is uploaded, along with more than a dozen other companies. It's approaching several dozen companies where I have these highlighted earnings call transcripts, and I'm adding to these almost every day. The most recent additions were Tesla and Alphabet's latest earnings call, which I evaluated and highlighted and made available for all of you to see. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.